Welcome to How We Grow, an essential playbook to grow and scale your vacation rental business with advice and insights from the best in the biz, with your host, Lynell Gordon. Welcome to the Vacation Rental Show. I'm Lynell Gordon, your host, and on this episode, we are really thrilled to have Avery Carl, who is a powerhouse in the short-term rental and vacation rental real estate space. She's named among the Wall Street Journal's top 100 and Newsweek's top 100 agents in 2020. She's the CEO of a company called Short Term Shop, and she has a team that she works with, and they've closed over, I think, $2.5 billion is what I read last in real estate sales. So she is quite the investor. She does it herself. She has a passion for empowering investors and teaching them how to manage their properties. She does a lot on teaching people about Vrbo and other short-term rental platforms like Airbnb. I think you must read voraciously. I was listening to you recently about your AirDNA stats, and I thought that was really cool. So welcome, Avery, guys, to our show. Avery, thank you so much for being with me.
Yeah, thank you so much for having me. Happy to be here.
So I'm interested in the best advice you have to give for people who are interested, and not necessarily just vacation rental managers, but people who are interested in investing in 2025 in short-term rentals. What is your best advice for them?
Okay, so I think to understand why now is a good or bad time to invest, you have to understand what's going on in the real estate market as a whole, because there's always some reason, right, that people are like, oh, well, I'm going to wait till rates go down. I'm going to wait till prices go back down. I'm going to wait for the next crash, which it passed. It already happened.
Right. Missed it.
Yeah. So what I want everybody to understand is we're in the bottom of the real estate market right now. In 2024 and 2023, both, fewer homes were sold, meaning the real estate market was deader than the last 65 years. So more homes were sold in 2008, 9, 10, that huge crash. More homes were sold during the dot-com bubble. More homes were sold in every other year than 2023 and 2024. So we're at the bottom of the real estate market, guys. It crashed. Now, what didn't happen, because there's still technically a supply shortage, is that the prices didn't go down. So the crash didn't look like what everybody wanted it to look like, but it happened and we're in it. So on the real estate agent side of things, we have listings that are sitting on market 6 months, a year. And we have a joke in the real estate sales world: you want to be somebody's first love, second wife, and third listing agent, because it's going to expire. The listing's going to expire on the first one, maybe the second one, and it will take until probably the third listing agent for a seller to realize that we have a price problem. And it's not necessarily that the agent isn't working hard enough on the listing side. It's that for every property, there is a price at which it will sell. And if it's been sitting on the market for a year and there's nothing wrong with it, the problem is the price, if you've been through multiple agents. So understanding that, then you can understand that there's virtually no competition when it comes to buying investment properties and primary homes right now. The reason for that, obviously, because rates almost quadrupled overnight 2 years ago. I think we're coming to the end of that. Hopefully, things are going to slowly start to change now that the media rhetoric has started to change. Fed has started dropping rates, which don't directly affect mortgage rates, but they do indirectly affect consumer sentiment when the media is like, oh, rates are tightening, versus, oh, they're loosening, even though it doesn't necessarily directly affect mortgage rates. We're through the presidential election, so that big wait and see factor is gone. So I do think we're towards the end of the, okay, we're waiting for a crash, we're waiting for rates to go down, all that. So I think that buyers are going to start trickling back in. But why it's a good time to buy right now is because there's no competition. In 2021, when rates were 2 and 3%, you were having to offer $100,000 over asking on every single property because 100 other people were also offering on the same property. Now you have the ability to act like a true real estate investor. You can make low offers. You can ask for concessions. You can do all these things. You have time to breathe to where you can do the work to get a good deal, because there's not a line of people out the door to buy every single property. So there's a lot of opportunity as a buyer right now. So my advice is, if you can find properties that make sense at the interest rates that we have now, then in the future, when they inevitably go down, because here's the thing, they will go down. The entire primary home buying world cannot afford to even make a lateral move because the rates are such a jump from what their rate on their current mortgage is. It would almost double what their payment is to not even upgrade.
Exactly.
Yes. And so the government's main concern is going to be those primary home buyers that can't do anything, which things are going to have to move eventually. The rates are going to have to come down, which will also affect us as investors. So all that to say, if you can find a deal right now, snag it, and you'll be able to get a better deal on the purchase price. Your purchase price is what it is forever, but interest rates can change. You can refinance to get those lower rates. So if you can find something that works now, snag it, because when the rates start going down some, everybody's going to jump back in.
Yeah, and I don't know how market specific this is because I've seen exactly what you're talking about in the markets that I look at on a regular basis. So I'm sure there are some markets that may be more bulletproof than others, but for the most part, that's 100% of what I've seen.
Yeah, none of them are bulletproof to interest rates, unfortunately.
No, absolutely not. And also, 1031 exchange is not so bad right now, depending if you're putting it all in there. But let me ask you this. You said something that caught my ear. You've talked before about your purchase of your short-term rentals and how they drive the cash flow for your long-term rentals that you're doing, specifically like larger apartments and things like that. Talk to me a little bit about that. How does that cycle work?
Sure. So I own about 225 doors across 7 or 8 states. 8 of those are vacation rentals. And my very first purchase was a long-term rental. It made about $1,000 over the mortgage in cash flow every single month, which is unheard of for a long-term rental. But that property is what got us into real estate investing because we realized, oh, wow, I was working what I thought was my dream job in the music business in Nashville, making $37,000 a year, which coincidentally, after deductions and everything and health insurance comes out and all that, was about $1,000 a month. So we're like, oh, wow, this house is making the same amount of money as me while I'm driving an hour in Nashville traffic each way to work for a boss that hates me. And there's not really any upward mobility, like all the reasons that you hate jobs.
For sure.
So then we said, okay, well, what is going to make us the most amount of money the fastest so we can buy more? And we landed on short-term rentals. This is back in 2015. There weren't people on YouTube and Instagram with the blue captions telling you what to do and all this stuff. We just had to figure it out back then. And that's how we got into short-term rentals. So we bought that first one in the Smokies in Tennessee. And ever since, even now, 10 years later, we don't spend any of the money that we make on real estate on anything other than buying more real estate. So we scaled that to about 5 properties in the Smokies over the course of about 18 months. And luckily back then, properties were 150, 125. They weren't 800 like they are now. So it was a lot easier to scale quickly. So I do want to set that expectation that you probably won't be able to do it that fast nowadays. And once we got to 5 of those, we had a decent amount of cash flow coming in. We thought, well, let's throw in a few long terms because that's where we started was long terms and it'd probably be good. We didn't really have a good reason. We didn't say we're going to structure it exactly this way, but we said, well, let's throw in a few long terms. We were able to buy duplexes in Chattanooga for $80,000, $90,000 back then. So we said, well, we won't even notice that 20%, 25% going out on these super cheap properties. So we then just switched to buying deals in Chattanooga and got up to about 40 of those. And then COVID hit. And we thought, oh man, here comes the end of the vacation rentals. The other shoes finally dropped. Like, here it is.
Everybody thought that.
Yeah. And so we thought, well, good thing we have all these long-term rentals so they can float the short terms until we get through this and figure this out. Well, come to find out, it was actually the opposite happened. So we all shut everything down, sat around and watched Tiger King for 2 weeks, and then came back and the doors blew off our vacation rentals. We got higher prices per night than we'd ever seen. But on the long terms, we had to worry about the eviction moratoriums and were we going to have people stopping paying rent and there wasn't going to be anything we could do about it. So that pendulum swung in each direction within about a 2-week period, but we were okay. Either one of those things ended up happening, by the way, for us.
Right.
No, we didn't have any of that. But it was a very good feeling to know with an 18-month-old, our first one, that whether the short-term rentals went down or the long-term rentals went down, we had another asset class to balance it out. And so we've never forgotten that feeling of like, okay, we're going to be okay if this happens. Wait, nope, the other thing's happening. We're still going to be okay. That's kind of why we've kept a diverse portfolio, because a lot of people are like, well, short-term rentals are so great. Why do you have so many long-term rentals? Because long-term rentals are great too. It's all great. But long-term rentals, you just have to do it at a much higher scale for it to really make sense. So if you're going to get into long-term rentals, you got to plan to buy 50 of them. If you're going to get into short-term rentals, you can do the same thing with 2 or 3. And we kept just buying both short and long-term rentals through COVID. And one day we had 9 closings on long-term rentals in one day. So it was like a lot of signing and it took a long time. And we had 2 little kids running around the closing table that day. And we're like, man, this is really annoying. Why don't we just buy an apartment building and have 9 units, but 1 closing? So then we started buying some smaller 12 to 30 unit apartment buildings. And now we just have our market set up where this wasn't necessarily on purpose, but the type of market where we buy vacation rentals and the type of markets where we buy long-term rentals are completely different.
Yeah, totally. Yeah.
Yeah, so we just have our 3 machines running at all times. And if a deal pops up in any of the 3 asset classes in our markets that makes sense for us, we pick it up.
Okay, so the asset classes are short-term rentals, long-term rentals, and the commercial.
Yeah. So short terms, single family long terms, and multifamily long terms.
Okay, that's what I was thinking. So let me ask you this. Tell me about the different markets that you buy in. One is urban and likely the other is touristy areas.
Yeah. So for short terms, we only buy in true mature vacation markets. So like the Smoky Mountains in Tennessee, Destin, Florida, areas that don't have a lot of hotel presence, but they do have a very tried and true, long-term, proven high traffic tourist demand. So we like that. I don't care if there's a bunch of other short-term rentals as well. I would rather be fishing in a pond of 10 million visitors than a pond of 1,000 or 10,000. So we stick to those types of markets with little hotels and then a lot of tourism demand, areas that are pretty dependent on the tourism industry. For long-term rentals, we like to stick to like medium-sized metro areas. So like a Chattanooga, Birmingham, Alabama. These are areas where the purchase prices are still relatively low. It's not like going to try and buy something in Austin or San Francisco, but there's still growth in terms of the population moving to that area. So that's typically the types. Like we don't really buy in any really big metros, but just the nice medium-sized. We're seeing some growth, but nothing too crazy.
I love Chattanooga. I lived there for about 7 months. My son went to school at Macaulay there. It's a beautiful market. I mean, it's absolutely stunning there. It's gorgeous.
Yes, it's a really cute town.
So it's a great place to live too and to visit.
Interested in a unique franchise opportunity? iTrip Vacations provides a unique business opportunity in a thriving industry. iTrip offers an executive-level income potential with work-life balance in an exclusive territory. As an iTrip franchisee, you'll provide a full array of short-term rental property management services for the properties that you manage. iTrip offers extensive support and training requiring no previous experience. Visit us online at itripfranchise.com to learn more.
So let's talk about the short-term rental market and tell me what you're expecting for your short-term rentals in 2025.
I love to talk about this because so many people who bought in 2020 and 2021 who just saw the downward trend between 21 and 23, those people like flipped out. For us, yes, we did see a decline in income between 21 and 23. It went back up some in 2024. But if you move that left-hand axis or whatever they call it in statistics over from 2020 to 2015, it's still on a very much upward trend, even though we had a downward blip in 22 and 23. For example, like my properties, I've got two bedrooms in the Smokies that I've had since 2015. Also a little 1-bedroom. I'm just going to talk about the 2 bedrooms. So those properties did like $75,000 last year. They did close to 85-ish at the height. Like the most they ever did was 85 to 87,000. We're back down to 75,000 and people are like, oh my God, it's down. But when we bought those things in 2015, we underwrote those to do $45,000 a year. And we were happy to get that. $50,000 was a good year. So we're still way above that. So if you zoom it out and see, oh, that's not a bust, it wasn't a crash, it was just a blip. Just like when you're looking at the stock market and you look at the 1 month period, it's like a lot of down. But if you zoom it out and look at the 5-year period, it's trending upward with a bunch of little blips and things, but it stays trending upward. So we found the same things with our short-term rentals. So I expect to do as well or a little bit better, not a ton better, maybe a few percentage points better than 2024 and 2025.
I expect that too, to tell you the truth. And we saw demand was down, but demand lessened in 2023, 2024, than, of course, 2020. But the pricing stayed pretty much up there. So did you change your prices that much in the last 3 years?
We change our prices almost every single day. So we use dynamic pricing. And my husband, Luke, who is really the pricing king, at least in our family, he's in there every day and he knows exactly how far out we should be booked. So like our places in the Smokies is typically like 5 weeks. So even though we use a tool like Price Labs to dynamically price everything, if we see that, okay, 5 weeks out, we're not booked, we're dropping prices. And then sometimes when you get like a cancellation or we raise the prices, the closer the date gets. So it starts out higher. If it's not booked, we lower. And then as it gets closer, we start to raise it again because people, if they need to book on that short notice, will typically pay a higher price. So we're in there changing pricing all the time. So I would say, yes, demand was down a little bit, but I'd agree with you that pricing was pretty similar. But it's really hard to say what our average price was because we're just in there messing with it almost constantly.
So you have 8 vacation rentals and you're managing them yourself in different markets.
Mm-hmm.
What's your greatest challenge?
So, I mean, really the greatest challenge with any client or customer facing business like that is just dealing with a lot of different personalities and learning to not take things personally. The same challenge with any client or patient or customer facing service based business is just dealing with people can be tough.
So what are you looking at for 2025 as far as buying? Where are your investors mostly looking right now?
People are wanting to buy cheaper properties in cheaper markets because the rates are higher. So a 7% interest rate on a $250,000 property is a lot less dollars than on $1 million property. So areas where you can get stuff for under 500 relatively easily, under 300 relatively easily. So Myrtle Beach in South Carolina, you got like Panama City Beach, Florida, Branson, Missouri is very affordable. The North Carolina side of the Smokies, people are still buying a lot in the Gatlinburg, Pigeon Forge area, but it's definitely a higher price than over on the North Carolina side. So a little bit of everything, but we are seeing 80% of our closings last year, we closed about 800 deals, were people who were past clients of ours, so experienced investors. And I would say probably an even higher percentage are experienced investors who we just weren't able to track because maybe they owned properties that they didn't buy with us already. So we're seeing the experienced people staying in the game. And I think that is a testament to like what the market is right now. The experienced people are buying and maybe the inexperienced people should take a cue from that, hey, the ones that know what they're doing are buying while nobody else is.
That's for sure. I agree 100% with that. What advice would you give to someone who is looking to scale their own short-term vacation rental business?
I would say don't live off of your short-term rental income. If you are trying to buy more, then every dollar you make needs to go back towards your next one. I think that's where people, they quit their jobs too early to see these big numbers coming in of what a property is doing. And if you're making $50,000 a year and you've got 1,000 or 1,500 coming in a month, that's a big number. So don't quit your job too early and buy as many properties as you can while still staying in that job that you hate because the goal is to buy as many as possible and doing it too early will cut you off from being able to buy more.
For someone just starting out, what would be your top piece of advice when it comes to choosing the right property and market for a first-time investor?
I would say there's all kinds of lists where you can go online and see best places to invest. The big data companies like AirDNA put them out. Also, the big management companies like Vacasa and Evolve put them out. And the thing about those lists is none of them say the same thing. So there is no right and only best place to invest. And the best place to invest is a place that you have the competitive advantage of knowledge. There's no spreadsheet that can outperform local knowledge. So we saw 2021 and 2, Navarre Beach or Navarre, Florida was on all the lists of best places to invest. And so many people just bought there without taking the time to learn the market. And they did things like bought on the wrong body of water. Like they bought on the Sound where the water is black because of all the tannins in the trees around here. The water is black. That's not where people go to vacation. They go to vacation on the Gulf where the water is clear and looks like the Caribbean, but the properties were cheaper. on the sound. So they went, oh, well, a 4-bedroom does X amount in this market and this property's cheaper, therefore it will make more money, when really it's not going to get rented at all because people don't go there. So understanding your market is more important than the spreadsheet part of it. The spreadsheet part of it matters. It does, but it's secondary to understanding who your guest avatar is, where they're coming, and why.
I agree. Especially with the south side and if they looked at the amount that 4-bedroom did, you're right. It's way different on that side than it is the other side of the street. In most markets, you'll find that. You have a lot of experience in managing a large portfolio of your own vacation rentals. What would you say is the number one thing that every investor should prioritize to ensure long-term success in the short-term rental market?
Buying in the right market. Buying in a market that has that proven tourism demand. I haven't been doing this forever, but I've been doing it for 10 years and I've never sold a vacation rental property because I bought in the right markets. I bought the right size properties in the right markets. And it is not the rocket science that the internet would have you think that it is, where you have to pay somebody $25,000 for their $17,000 proven step process. It's very common sense. Buy where the tourists are going.
And this is the other thing she said, guys, that I wanted to bring up too. Don't spend all the money that you make in this. Keep it and reinvest it. You're going to need it. The one thing that really surprises me when people buy a short-term rental is that they don't calculate all the costs that are involved there. Because if you're doing rentals, there's rental insurance, there's all kinds of upfront costs that you have to front it each month. So how do you suggest is there a ratio that you stick to? Is there a formula you have?
I don't believe in rules of thumb because people try to apply them a little too rigidly to every single thing. But my very loose rule of thumb, if I'm just cruising Zillow, I'm not to the point of engaging an agent and asking them to find out all these very specific details, you can expect 35% of your gross income to go towards expenses before your mortgage. So I use that rule, 35%. Usually ends up being a little bit less, but it's best to estimate on the higher side. And then in a lot of markets, once you start making offers on things, they will have what's called a cost to own sheet. Like down here in Destin and 30A where I live, it's really common to have all the bills and the price per clean, et cetera, attached to the backside of the MLS. So it won't be something you can see on Zillow, but your agent will be able to get it for you. But I would say 35% before the mortgage is a good, very loose rule of thumb to just do some back of the napkin work.
I love that. I love that you have that. Tell me your favorite vacation rental story, your favorite story about a guest, or even investment sale in your experience could be fascinating as well.
So we recently, and I hate that I didn't see this before a client did, because I would have bought it, here in Destin. So the average to get a good 3-bedroom with a pool in the right area of Destin, close to the beach, you're looking at $800,000. And there was a property that was on the market and it was listed as an 11 or 12 bedroom. But the front picture on the MLS was a really small house, or small looking house, definitely not 11 bedroom looking. And it just looked like a weird, this is one of those weird foreclosure things. And maybe it's multiple properties, different places. And it was for sale for $1.5 million. So you're like, this looks weird. I'm not doing this. So many people clicked away from it. What it actually was 3 properties that the agent listed. I don't know why in the world they listed it the way they did. It was 3 properties, a 5-bedroom, a 3-bedroom, another 3-bedroom, and then that last 3-bedroom had a lockout studio apartment. All 3 of them had their own pools, but they were on one parcel. So there's really no way on the MLS to list 3 separate properties on one parcel without just explaining it in the description of the property. So now it's a 5-bedroom with a pool, a 3-bedroom with a pool, another 3-bedroom with a pool, and a lockout for 1.5. So one 4-bedroom property with a pool in Destin in the right area is 1.5. And these things really just needed cosmetic work. They needed to be painted on the outside. They need some kitchen updates. They need some flooring and some paint. And we were able to get, these things will easily do well over 300,000 gross for 1.5 million and a few hundred, not even a few hundred, maybe 100,000 in updates. And that is the best deal that I've ever seen. I'm sad that I didn't see it first, but very happy that our clients got it because that's life-changing money.
That's crazy. Wow.
Yeah. And that was just recently too, in the worst market in the last 65 years. So the deals are out there.
That's a great story. Is there any other advice that you'd like to give to vacation rental managers right now? Anything you can think of?
Yeah, I think my advice is always the stars are never going to align for you to say, I feel like I'm ready to grow now. I feel like I'm ready to buy another one, or I feel like I'm ready to go find some more owners to work for. The time is always now. It's like having a baby. You're never going to be like, okay, everything's ready. We're at the best place. Here we go. You're never going to wake up and say that. So just keep building every day. 1% better than yesterday, every single day.
Avery, thank you so much for coming on and sharing. Was really excited to have you, and I really appreciate you coming on.
Yeah, thank you so much for having me.
This episode of How We Grow was brought to you by iTrip Vacations. To find out more about how iTrip Vacations can help to grow your vacation rental business, visit iTripFranchise.com. Make sure to search for How We Grow in Apple Podcasts, Spotify, and Google Podcasts, or anywhere else podcasts are found, and hit subscribe so you never miss an episode. On behalf of the team here at Inhabit, thanks for listening.